Hello and welcome to Investing Confidential. Even though we're looking at what is the ultimate time bomb in the world, the U.S. debt clock, I'm going to talk a little bit about China here. There was some news coming out overnight, and I guess the one thing investors want to know is China buy? And I guess the easy answer is yes. Certainly, up 8%, which it is today on all ETFs and commodity stocks, is tough to buy. But I'm going to walk you through why this stimulus. And by the way, this isn't the first stimulus the Chinese government have tried. They've tried 20 different types of stimulus. Why this one finally will probably work. And it has nothing to do with the interest rates, by the way. Now, the biggest problem in China, and I've talked about this problem even before when it started to bust, going back in the beginning of these videos. Probably none of you listened to them, but that's okay. It has to do with real estate. And why is real estate so important in China? Why is it the ultimate um, asset class? Well, because real estate, not technology, not exporting, goods through Walmart. Real estate has been the engine of growth for the Chinese economy for the last 25 years. I mean, real estate development. End of story. Nothing else even comes close. Okay, not even exports, not even the manufacturing of Apple phones and all that. Nothing comes close to the wealth effect and the economic impact that real estate's had. Quite frankly, I'm going to go through it really quick. The government 25 years ago started putting out growth targets to small cities, to regions, to districts. And the only way that these districts could achieve those growth targets was through real estate development. And how they do it, very simple. Going back over 30 plus years ago, the Chinese government basically took away the restrictions of land ownership, kind of gave away the land, and then bought it back from farmers, knowing full well that they had to stop this idea of having all these small millions and millions of small farms and had to consolidate to feed the people. That's the background. They gave the farms away. Then they started buying it back, and they started making people wealthy. And then the local mayors would figure out, hey, I have to grow 15%. I got to develop this part of land. I'm going to have my cousin buy it, and then I'm going to buy it from him and make him rich, and then I'm going to get rich. So this wealth effect continued for 25 plus years. And that's why China has more billionaires and more millionaires than any place in the world, okay, to real estate. 80-90% of it has its the origins in real estate. So that's the bottom line. So the real estate is the kingpin, the linchpin for the Chinese economy, and always has been. So when as the real estate bubble continued, and as people got rich and rich and rich, Xi Jinping came in and decided to pop it to consolidate his power. He needed to get the billionaires and millionaires under control, both in real estate and on the technology, and that's what he did. And he destroyed the Chinese economy. He destroyed the stock market. He destroyed the real estate market. The guy is probably the most hated guy in China, but you can't say that because if you do, you get you either get lost or you go away for a while and never be seen for quite some time, like Jack Ma. And then recently, we had a very important economist in China last week. He not last week, but a few months ago, he made some comments negative to the Chinese economy, not to Xi Jinping, and he has disappeared. And it's finally coming out that he's somewhere, but no one knows where he is. But he's disappeared. He's being educated. So this is a command economy, okay? 100% command economy. It used to have a lot more entrepreneurial type effects and on the economy. Well, Xi Jinping has stopped all that. He crushed the real estate market, which was essentially entrepreneurial. He crushed the tech industry, which was entrepreneurial. In fact, the funny thing is that every time someone in China becomes the um, richest person in the country, a week or two later, they do they come out and they say they they have a problem with either their revenues or they're going to have a problem with their earnings, and the stock gets crushed. So nobody wants to be the richest person in China. Everyone, when they get up there, they put out some negative reviews of their outlook, and their stocks get crushed. So this is ongoing. So because it's a command economy, the central government can do anything they want. Okay, they control all the banks, they control the spigots. So what have they been doing over the last 5 to 7 years? They've been trying to, increase liquidity, lower mortgage rates, all of this. None of it ever worked. So the press today is focusing on this, they call the bazooka, right? The lowering of the rates, lowering mortgage rates, increasing. It's not going to work. Why is the market going up? Well, the government, the bazooka, okay, part of the bazooka, big part of the bazooka is the stock market. So they've allocated 70 plus billion to ETFs to buy the stock market. They also allocated 50 plus billion in the form of loans to large corporations, mostly the SOEs, the companies owned by the government, right? Government-run companies, and these companies have now tons of money to buy their stock back. So, and they're large cap stocks, and they drive the index up, and everyone looks at index. So everyone's paying attention. No one's paying attention to individual stocks. The CNBCs and all these other clowns are just looking at FXI and the Shanghai index, Shenzhen index. That's all they're looking at. And in the end, that's why they know that, because we see that in the US with the S&P. It's a completely manipulated index. But getting back to China, so this firepower to buy directly in the stock market through ETFs, government buying the stock market, and lending money to companies, large government companies to buy, the index companies to buy their stock back, has led to a massive rally. Will the rally continue? Well, if you look at a chart, you'll see that we've broken a downtrend, right? A significant downtrend that we've seen for a while. Will the stock market go straight back up? No, obviously not. But we've broken the downtrend. The firepower, to give you an idea, the Shanghai stock market trades about 1.2 to 1.3 billion US dollars per day. So you've got 70 billion plus 50 billion, 100. So you've got, think about it. You've got months and months of buying power. That's just incremental buying power, right? Over whatever's out there. And the Chinese people, investors, have a different thought process, both on real estate and in the stock market. They don't look at earnings, they don't look at valuation, they don't look at anything. What they look at is, is there an incremental buyer that's going to drive the stock higher so I can make money, right? Valuations are useless. No one pays attention to anything but momentum. Okay, so the stock market now has momentum. There's an incremental buyer that may be buying for a very, very long time. The Chinese mentality is real estate. The investors they're momentum buyers, they're gamblers. So they're going to go in and buy. And as it keeps going up, it's going to force another guy to go and buy. Now on the real estate market, I'm not sure, again, how much the stimulus is going to matter, but their prices have come down enough that there's so much liquidity. Chinese savings rates have gone through the roof. Chinese love real estate. You're going to see some buyers step in, take advantage of the very low rates. There's virtually no carry anymore. There's no cost to carry. The real estate taxes are extremely low, if there are any. They probably got rid of those already as part of the stimulus. So there's no risk, kind of, if you can certain types of properties you can buy and you'd hold on to it for 10 years. The Chinese think long term. So the market, which is what we're talking about, has had a big boost today. It's probably going to continue to run. Probably, would you buy it up 8%? Most people would say no. I would say leg into it. There is a trade there. Is it a long term? Who knows? I think, as I said before, if Xi Jinping himself one day disappears or is not around anymore, then the market is a screaming buy. But for now, you've got this bazooka. It's come in, buying the market, lending money for companies to buy the market. The market is extremely cheap in relative terms. Again, you can't compare China to any other country, but relative terms, China is cheap on a price to book and all cash flow, all of these numbers. So, as a non-Chinese investor, obviously, what do you buy? You buy the index if you can, FXI. I talked about the last time I talked about Chinese stocks. I talked about Alibaba. These type of names obviously are doing extremely well. They will continue to do well because they've been beaten down. And there's been a lot of people short China, and that's also going to cause the market to continue to rally and squeeze out these shorts. So, sum it all up. Yes, take advantage of this breaking of the downturn. China will continue to run. It's a trade. Okay, it's not an investment, it's a trade. So if you're looking for a long-term investment, not right now, but as a trade, certainly things are moving in the right direction. But as always, if you're going to buy China, be careful out there.